ഹലോ ഫ്രണ്ട്സ്, എല്ലാവർക്കും പുതിയൊരു വീഡിയോയിലേക്ക് സ്വാഗതം. NPS അഥവാ പങ്കാളിത്ത പെൻഷൻ പദ്ധതിയിൽ ഉൾപ്പെട്ടിട്ടുള്ള സർക്കാർ ജീവനക്കാർക്ക് വളരെ ഉപകാരപ്രദമായിട്ടുള്ള ഒരു വെബിനാർ പ്രോട്ടീൻ PFRDയുടെ സഹകരണത്തോടു കൂടി ഈ ജൂൺ മാസത്തിൽ സൂം പ്ലാറ്റ്ഫോമിലൂടെ സംഘടിപ്പിക്കുകയുണ്ടായി. ആ വെബിനാറിലെ വളരെ പ്രസക്തമായിട്ടുള്ള കുറച്ച് ഭാഗങ്ങളാണ് ഈ വീഡിയോയിൽ പറയുന്നത്. നാഷണൽ വെബിനാർ ആയതുകൊണ്ട് തന്നെ ഇംഗ്ലീഷ് ലാംഗ്വേജ് ആണ് ഉപയോഗിക്കുന്നത്. ഒരു കാര്യം ആദ്യമേ പറയുന്നു, പങ്കാളിത്ത പെൻഷൻ പദ്ധതിയെ അനുകൂലിച്ചുകൊണ്ടോ അല്ലെങ്കിൽ അതിനെ എതിർത്തുകൊണ്ടോ ഉള്ള ഒരു വീഡിയോ അല്ല ഇത്. പങ്കാളിത്ത പെൻഷൻ പദ്ധതിയുടെ ഇൻഫർമേഷൻസ് അതിൻ്റെ ഗുണഭോക്താക്കളിലേക്ക് എത്തിക്കുക എന്നുള്ള ലക്ഷ്യത്തോടെയാണ് ഈ ഒരു വീഡിയോ അപ്ലോഡ് ചെയ്യുന്നത്. ഓക്കെ, അപ്പോൾ നമുക്ക് വെബിനാറിൻ്റെ പ്രസക്ത ഭാഗങ്ങളിലേക്ക് കടക്കാം.
So in the next 50 minutes, I'm going to walk you through what the national pension system is. Right, Mamta ma'am? हम लोगों ने करा है opt, but कई बार कुछ छोटी-छोटी चीजें ऐसी होती हैं which are very important to know. And it is for that reason that PFRDA has tied up with Center for Investment, Education and Learning and brings to you this program which will open your eyes to different aspects of NPS. Really grateful to have representatives from NSDL, which is Protean today. I'm going to talk about the role of NSDL in pension. And I'm happy to take any questions that you have through chat during my presentation. And of course, through interactions after we complete. Nice to see you, Rajesh ji. Where are you joining us from? Please use the chat bot. Let me know where are you coming in from. And all of you, I believe, I saw so many hands go up. Everyone has NPS. Okay, so how many of you understand NPS? Yes? Yes, Abhay sir, do you understand what is NPS? Or you opted for it because it was, mandated by the government to opt, right? So, oh, no. Ajay ji, I'm going to change your perspective. I'm going to change your perspective about pension and national pension scheme and the need for putting money aside into national pension scheme. Yes, Prashant ji, very nice to meet you. Wonderful for you to, come here today for today's program. So, like most of you already know, because you are a part of state government, National Pension Scheme was adopted way back in 2004. It was initially started as something which was only meant for people like you who work in state governments, for additional people in central governments. And then slowly by 2008, it was rolled out to everybody. Anyone, any citizen across the length and breadth of India can engage with the National Pension Scheme. Right, Rajesh ji? So what is the reason? Can someone tell me the primary reason for pension? What is the role of pension? Why should someone go for retirement planning? Okay, let's see. Let's figure out, Vijay ji, if old pension scheme is better than the NPS. We'll find out by the end of today's session. You will probably have the same or a different perspective. But can someone tell me, like, money essentially has different roles, right? Correct? Money doesn't have one role. Money has different roles. When we talk about financial literacy, we always say that money is about, number one, insuring yourself, right? Having the right insurance products. The second thing is investments. And can someone tell me what is the role of money when it comes to retirement? Why should you, what does money mean when you're looking at retirement? Anyone? Rajat, what does money mean to you when you talk about retirement? Feel free to choose the chat box. And what I'm going to tell you is that money essentially for retirement serves a very specific purpose. And that purpose is that you worked hard all your life. आपने सारा जीवन इतनी मेहनत करी है, तो अब वो समय आता है retirement के उस phase में, during that phase of retirement, that you now can take a step back, relax, and let money take care of you. Correct? Absolutely, Nirkar Saab, very nice to see you coming from Maharashtra. Money as retirement is financial independence. Absolutely, Vijay ji. So, with regards to retirement planning, we always say that money has a twofold purpose. What is that twofold purpose? The first purpose is an accumulation phase. The first phase is with NPS also, you will see, is the time where you are right now. Is the time where you are putting aside money from your monthly salary into the national pension scheme. Now, at this point in time, it may seem harsh that, you are 10% of your salary is just going away into something which is not giving you any returns at this point in time. But what you fail to realize sometimes is that money, when put to good use in the right policies, compounds on itself over periods of time to give you returns that you cannot imagine it right now. Right, Mamta ma'am? Now, the second thing is where NPS comes in handy is the distribution phase, or what we call exit. What is exit? So let's talk about that a little bit in detail, and then I'll get into how that works. What does entry mean? How should you go about doing an NPS? Should you say that, it's not the best product in the market? Or should you say, let's start with this, see how it goes, and maybe get more people to start planning for retirement? Because the way India works today is very different compared to our parents' generation. Our parents had that cushion of retirement pension. Our parents had that cushion of savings. Today, we've become a spending economy where a lot of our money goes into things that we want to buy. But what will happen after you retire? And another sad part with retirement, Rajiv, is, two products that I talk about a lot. One is life insurance, term insurance, and the other is retirement. The third is, of course, will planning. And a lot of times people say, why do you want to talk about a time which is far away or which is not happy to think about? But the point is, if you don't start today and you don't do it correctly today, there will be a point where you will look back at today's session and you will say, I wish I would have started, and I would have started with the right products. So let's figure out how that works. All of you have tier 1 NPS accounts, or is there anybody who also has a tier 2? Abhayji, you also have a tier 2? Anyone, Rajit? So typically, NPS for state government, let's not talk about TTS because that's only for central government. For state government, NPS is primarily present to two offerings. One is your tier 1 offering and the other one is your tier 2 offering, right? Tier 1 is that account that your government has mandated for you to open. This is mandatory for you to open. Tier 1 implies that you cannot take out the money that you are putting in that retirement. Why? Why should you not take out the money that you are putting aside for retirement? And while it seems harsh at this point in time, it's supposed to convey a specific purpose. And that purpose is to take care of you when no one else is there to take care of you. Right? So your tier 1 account has tax benefits under ATC, provides you additional tax benefits under ATCCD of 50,000 rupees, which no other investment product provides in the country at this point in time. It provides you a very unique feature with regards to, financial planning or investments. And with regards to NPS, it is something which is known as portability. This implies that if tomorrow you were to migrate from the state government to the central government or to any other private sector, you can carry your NPS as it is to the different organizations. How that happens, we will find out in today's session. Your tier 2 investment account is a layered account on top of your tier 1 NPS account. It's not something which is mandatory, but over a period of time, if you are happy with the returns that your NPS is providing, maybe it might be a good investment option wherein you can continue to put aside more money for future unforeseen needs. So when we talk about retirement planning, one of the first things, we will talk about partial details as well. Okay, very good, Mamta ma'am, only tier 1. One of the most important things that people miss when they plan for retirement is something which is known as inflation adjusted returns. What we think today is, that person is getting so much amount in pension. What we fail to realize is that 60,000 or 70,000 that he may be getting in pension, when adjusted for inflation over a period of time, changes drastically. And it is for this reason that NPS was brought into place to provide you access to market-linked returns. Malik Saab, we'll talk about that. Let's see if 9 CAGR is still beating inflation or not. A lot of you might be having investments in fixed deposits and those products which are not even beating inflation. Let's talk about the difference between 5%, 6% and that 9% today in Abhisab. Let's see what will happen by the time you retire. So we'll figure out the good and the bad of NPS in today's presentation. Mostly good. Let's see if some of you have any concerns. How can we go about doing that? Okay. So all of you know that the tier 1 is mandatory, for central government and state government employees. Can all of you use the chat box to tell me, because it's different for different states, how much contribution is coming from your government? Is it 10%? Is it 12%? Is it 14%? Which is the contribution that your specific state government continues to put along with your contribution towards the policy, right? Now, since it is all your deduction is linked to your dearness allowance in your salary, these deductions keep on increasing as you increase in age and go higher up in rank in your organization. Punjab, 14%. Wonderful. It's been increased to 14%. Kerala, Rajasthan, it's only 10%. So every state has a different parameter for the contribution that they will put in, and it varies depending on the state governments with which you are employed, right? Nikunj Naik Sahab, Odisha, 14%, right? So that is something that the government is putting in for you to take care of your future expenses. In the all citizens model in the private space, government doesn't put in that contribution. So at least you can think of it as a recurring investment wherein you are putting in some money and the government is contributing equally or a little bit more in Mamta ma'am's case, which is why it needs to be set aside. Right, Sonia? It has to be set aside. Correct? Now, because it is portable, you can carry it from one government to whether you are on deputation to other governments. It works across the length and breadth of the country, which is why we have an audience today where I can see someone from the Northeast, I can see someone from Kerala, someone from Punjab, someone from, J&K joining in. So you understand the versatility that it provides. Now, one of the biggest mistakes people do is they think that investment, any kind of investment is only supposed to generate return. Yes, the primary goal is to generate return, but in addition to that, there are other goals. Another goal which is linked to that is capital preservation. कि जहां आपका पैसा लग रहा है वो ग्रो भी करे और उसके साथ में वो कुशन भी रहे कि it doesn't erase, right? How that happens, we will find out through the different schemes that are part of NPS. But all of you know that NPS provides market-based returns. They depend on the NAV of a pension fund. Anyone here who also puts money aside in mutual fund schemes along with your NPS? That's when you can compare, between the two. What are the returns? What are the purpose? Mutual funds are supposed to only provide you returns for your specific goals. NPS is meant to provide you returns, but is also supposed to provide you some cushion to take care of a time when you no longer will be working, right? So that is the fundamental reason to first understand कि इस चीज का purpose क्या है. What is the goal that NPS is offering you before jumping the gun and saying it gives you poor returns, correct? Now, because mutual funds and a lot of you have put money in mutual funds, have been successful, Shivam, they've been very successful in India, where we've been able to generate returns which beat our PPF accounts, which beat our other traditional fixed income products. That is where pfrda and the whole national pension scheme was devised, to build on that and provide individuals higher than otherwise possible returns over periods of time if you continue to do it consistently for a long period in your career, right? Now, while the final returns are not fixed at this point in time, you can always say that that person is only getting this much returns. But what you fail to notice is, what was his contribution? Did he consistently do it, or did he forget to do it in between, and did he pause it in between just listening to someone who said that it might not be a good investment? What you have to understand is, just like we have different piggy banks serving different purposes, one piggy bank serves one purpose, किसी चीज में कुछ और पर्पस होता है. Similarly, retirement planning के goal को achieve करने के लिए, especially for the salaried class, we're not talking about blue collared workers here, NPS provides that versatility. Correct? Moving on. When we talk about, the structure of an NPS functioning, how many of you know or have dealt with, organizations at different level in the state? It could be your DDO, which is your primary nodal agency for taking care of your, registration forms, registration kits. The same thing changes for the central government. At the central government, you have something which is known as a principal accounts officer and a pay and account office. For the state government, and since all of you here today are from the state government, I'm going to show you what the hierarchy of a state government pension fund structure looks like. Typically, if you were to say that there are three, it's like a triangle. And at the entry point here is you who are the subscriber. Okay, you are the subscriber of this NPS scheme. Okay. At the first level, the first nodal agency that you interact with is known as your DDO, or your drawing and disbursement office. All right, drawing and disbursement office. Now, this drawing and disbursement office is responsible for your forms, collecting any changes that you want in your NPS policy. All those things are done by the DDO. The second step is something which is known as a DTO, or your district treasury office. Okay. And at the topmost hierarchy is something which is known as a DTA, right? District treasury and accounts, which are responsible for final disbursement of your funds. So first of all, it is very, very important to understand that, you are interacting with the right people at the right level in the right hierarchy. And the reason for that is everyone has a different role to play. Your DTA has a different role to play. It is linked to your grievance handling, resolving all your queries, maintenance of your details, and making sure that your DTO and DDO are working and doing the things that they are supposed to do. So first, understanding that the structure of a state government pension, how does it look? As you go down, the first person who you will reach out with either be your organization or a drawing and disbursement office, which is appointed by your organization. That is where first time you will say, you'll fill in your PRAN form, you'll fill in all your forms, you'll go register, they'll help you, with your initial kits. And they will be the ones who will be interacting with you in case you need to make any changes to your fund. And yes, you can make those changes to your fund if you are not happy with the performance of the fund. We will talk about that. But for state government, at the baseline is your DDO, then comes your DTO, and at the top is your district treasury and accounts office, which takes care of, God forbid if something were to go wrong, who would be the right person to contact. And that's something which is very, very important to understand. Now, while filling those NPS forms, since a lot of you already have NPS in place, as a government employee, you can choose any of the pension funds that the public sector funds provide, right? They are available as default. But if you were to go above and choose a tier 2 fund, you have the versatility to choose a scheme according to your, goals, according to your requirements, according to your preference. Correct? Now, all of you must either be having the LC25 or the LC50 scheme, correct? Yes, absolutely. Not 1940, Nirkar Saab, 2040. 1940, we are going all the way back, right? Yeah, absolutely, 2040. That is when, yes, returns will become more visible. But as someone from the finance industry who understands how market-related returns work, I always advocated to individuals who are skeptical about it, because what you're looking at is right now in this movement. What you don't see sometimes is the impact that compounding has despite market cycles going up or down, up or down, up or down. Correct? So typically for government employees, you have your conservative life cycle fund, wherein your exposure to equity is capped at 25%. This is known as LC25. Correct? Or you have a moderate life cycle fund where you can expose 50% of your contribution to equity. Now, anyone here who doesn't like equity investments or is skeptical of market-linked investments? Yes, Rajesh, any exposure to financial market-linked products, shares of companies, anything like that? No? Anyone? Kartika? How many of you do that? You expose your money to financial market-linked instruments. What you will notice is, Abhayji does, very nice to see that. What you will notice is that equity instruments over a period of time provide you returns, provided that you've invested in the right ones. And how to choose, which ones to choose, we'll find that out. But if you do it in the right products consistently over a period of time, you are able to get better than your fixed deposit returns. Correct? So one of these schemes must have been chosen either by default by your HR or your, the person, the nodal officer at your end. But if you have not seen it so far, which fund has it invested in? Is it an LC25? Is it an LC50? Maybe open out your document and see. Or if you are registered on the app, I'll show you how to do that. But you can see, where is my money invested in? So traditionally, all your government funds are your, first one is your SBI pension fund, which is the second pension fund on your screen right now. Atul Dwivedi ji. The second one, how many of you have opted for this? Yeah, you can't choose. It's by default, it's these three funds only. But for tier 2, you can choose, right? LIC pension fund and your UTI pension funds. These are provided by the government, correct? Now, these funds typically do not have any allocation to equity above 50%. 50% is the maximum cap, because even the government wants to protect your money. It's not like they want to put all your money in the equity markets and then tomorrow say the markets crashed. A large chunk of the portion of money that you put aside in NPS goes towards fixed income instruments. These fixed income instruments could be your government bonds, could be your bonds which are linked to the corporate. And that is where you are able to get, safe returns, relatively safer than the market, but also better than your fixed deposit. And a small portion is then allocated to gilt securities or government securities, which are short-term debt instruments, which could be your treasury bills, GSECs. These are all provided and secured by the government of India. Right? Moving on. Are these the only pension fund options that are, that are available? Yes. For tier 1, you don't have any choice. By default, it's going to be the first three, which are your government provided or facilitated pension funds. But for additional, you can actually choose your ICICI or HDFC or Kotak pension fund or Aditya Birla. Compare the returns. And why compare? Because like I mentioned at the beginning of the presentation, मैंने बताया था कि portability is something that is provided by pension funds, and through NPS, you have the option to switch across funds. And why it is good to think about that if your fund is not giving you good returns is that when you put your money in a mutual fund and you make that switch, you are liable for tax. Whereas when you're making any kind of switch in a pension fund, if you're doing it only once a year, you don't have to pay any tax on that, right? So that is another advantage that your pension funds provide. Again, like most of you would already be aware, it depends on the age that you are. If you are 35 years of age and you put your money in an LC25 fund, maybe today, Kuldeep ji, go and see, is it an LC25? Is it an LC50? If you already know, please feel free to share here so that other participants will also be able to understand, right? As age changes, your exposure to equity is brought down. And the only reason for that, Rajiv, is that now your years to retirement are lesser, right? There is something called years to retirement, and then you have something which is called years in retirement. As you progress in age, it is not very safe to put all your money towards the equity markets, which is why the only product that provides versatility with reference to you and is uniquely catered to your requirements is NPS. No mutual fund will be changing this allocation or any other products for retirement purpose with reference to your age. All right. Similarly, for an LC50, it changes. Now, you are already aware how to go about opening an NPS account. You have to submit the scheme, apply for it. That request is captured in your case, like I mentioned, by the DDO. And then it is forwarded to the CRA system, which is your Central Record Keeping Agency, which is NSDL in this case. Okay. And then it is authorized, and that's how first time you open an NPS account. Okay. Right. So moving on. How is it vested? The word vested in English implies, now you are ready to avail the benefit of all your funds, whatever money you had put aside. It may be at the time of superannuation, or like somebody was asking me, I want to opt for it at the time of my VRS. Whatever money that you have put, 60% of that money can be withdrawn, right? 60% of that money can be withdrawn. Of that, 40% is not taxable. It's not taxable. Comes under the exempt scheme. 20% is taxable, but you can also put it in other instruments to see how you can save that. 40% of whatever money that you were supposed to get is put aside in the purchase of an annuity plan. Now, can someone tell me what exactly is an annuity plan or how does it work? Yes. Yes, absolutely, Nirkar Saab. Don't choose tier 2 instead of an SIP. Now, your SIP serves only growth purposes, right? We are talking about capital appreciation there. But if someone wants to do retirement planning and wants to put aside a certain section of salary for additional retirement planning expenses, that is when you choose tier. Above that, correct? Yes, Lavish, very nice. Wonderful to see how interactive you all are. All right. Now, it's not necessary that you withdraw everything when you turn 60. You're going to retire when you turn 60. But NPS is one policy or product which allows you that deferment till the age of 75. So if you want to go and work in another organization after this organization, you can continue with your NPS plan. Okay. Now, unfortunately, if for someone you did not put any money in your NPS, your corpus was less than 2.5 lakhs, then in that case, you can withdraw it and you don't even have to purchase an annuity plan. The purpose of the annuity plan is to provide you monthly kharcha, jisko hum bolte hain na, monthly aapko thoda paise for your years in retirement milte rahe. But if you put aside money which is less than 2.5 lakhs, you don't even have to do that. Okay. Now, say supposing you retired before turning the age of 60 or whichever plan you've taken, whatever age they have set aside for purchasing an annuity, you have to continue your contributions to the NPS till the time you achieve that certain age. So these are something that you have to read before investing in or saying it is good or bad, what purpose it serves. All these are tiny, aspects which actually have a big impact in the long term. Another big impact is, unfortunately, if something were to go wrong, if someone were to die, 80% of that corpus goes into the purchase of an annuity, if you had not retired, and that amount is continued to be paid as pension for your immediate family. It could be a wife, it could be a mother, it could be anyone in your case, right? So everything has a different purpose. So if you were to link insurance with investments, it doesn't serve any purpose. Insurance has its own purpose, investments have their own purpose of capital appreciation. Similarly, retirement products have their own purpose and they have been designed keeping in mind that purpose. All right. So in case someone were to go missing, FIR is filed and all those, the protocol is followed in that case. Okay. You can take out money from an NPS after 3 years. Okay. And let's do a calculation to see how much money can we take out after 3 years. Say, supposing you were to be contributing 4,000 rupees year 1, 4,000 rupees year 2, 4,000 rupees year 3, and your employer were to be contributing the same amount of money. After 3 years, if you wanted to withdraw, Rajiv, can someone tell me how much money can you withdraw from your NPS after 3 years? Is it A, 6,500? Is it B, 6,000 rupees? Or is it C, 3,000 rupees? I said 25% you can withdraw. Yes? Yes? Oh, Ashraf Saab, it's less than statutory because that contribution must have only gone for that small period for till now. That's why it looks less right now. But imagine when by the time you retire. Very good, Saurabh. The correct answer is 3,000, not 6,500, Yogesh ji. And the reason for that is partial withdrawal only up to 25% of your contribution. Okay? Minus your returns. It's looked at it face value. If you had put aside 12,000 rupees, you can take out 25% of that 12,000 rupees. I'll take questions on that when we come to the Q&A. Okay. Similarly, if you were to now want to take out second partial withdrawal after the next, say you again continued your NPS for year 5, years, 4, 5, and 6, how much can you now withdraw? How much can you now withdraw? Can someone tell me? Quickly. Yes? Let's see, someone has in the chat box. 6,000, Ashish ji is saying, okay. Okay, very nice. No, it again continues to be 3,000. It's not 6,000. Oh, very nice. I think Asha ma'am said the right answer. Very good, Asha ma'am. 3,000 rupees is the partial amount that you can now withdraw for your second withdrawal. Okay. Subsequent withdrawal will only be 25% of your subsequent contributions. But don't look at, just NPS. God, I wish that, no such situation arises where you have to take out money from your retirement savings. It's not a very pleasant situation to be in. But yes, such situations do arise from time to time. So how much money will I get if I exit upon normal superannuation? Like I mentioned, 60% you can take out, in lump sum, of which 40% will be tax-free and 20% comes with tax. Remaining 40% goes to purchase an annuity plan. If you were to exit prematurely, you can withdraw 20% of your accumulated wealth. Okay. The rest of it goes to purchase an annuity. Now, what are the requirements, documents that you need to submit for superannuation, or if you want to, withdraw your money, you're now in the distribution phase, is your KYC documents, your stamped receipt, your cancelled checks, and your request come undertaking, which your DDA will be able to assist you better with. Okay. There are different kinds of annuity. It is always advisable that you take an annuity plan where, even if something were to happen, whatever money that you had put into, your contribution also is given back to you. Okay. Annuity payable for life. Maybe today, go back, look at your NPS documents to see which of these annuity plans you would want to purchase when you retire. Okay. Payable for life implies till the time you're alive, you will continue to get some pension. Payable for 5 years, you can say, okay, I want only for the first 5 years after I retire. Okay. I want only for the first 10 years after I retire. All right. Annuity payable for life with return on capital, and something were to go wrong, please make sure that you have selected after your death, at least your purchase price or whatever money that you had put in, which is return of capital, that is given back to you. So please make sure that you go through with your, documents to see that you have chosen that. Okay. Now, default annuity, all of you already know because you're probably already in the default schemes part, your whatever respective governments. It provides annuity for the life of the subscriber, and in case something were to go wrong with you, to your spouse. Okay. Now, that is where you have to be careful that you have provision for the return of purchase price. And not just, I don't want return of purchase price in any case. So just make sure that that is checked on your forms, or it's been recorded by your central record keeping agency. Okay. Now, these, in case something, God forbid, were to go wrong, your dependent mother or dependent father will be able to avail of your contributions. Okay. Now, if you don't want to opt for this default option, you can always go and say, I don't want this option, but it's advisable to take one where your return of capital is employed. Now, some of the annuity providers in India, you already know LIC, SBI Life, ICICI Prudential, all your private sector, Tata AIA, all these provide annuity options upon retirement. There's a member from Protean, Desai Saab is here. Protean, which is used to be NSDL, is the central record keeping agency. They are the ones who will have all your documented proof. Go through, their website or their platform to see if you are a government subscriber. These are your details. This is the amount of money that you want to utilize for purchase of, annuity. How much amount will you get for your pension? Okay. And when you do that, you can see across different schemes. So say Bajaj is giving me this much returns for annuity for life. If I were to do for my spouse and myself both, it's giving me this much. If I were to include my family also, it is giving me these returns. And depending on that, you can compare which annuity to purchase at the time of retirement. Okay. Right? And these are some of the other annuity options that are available. If you are in the age bracket of 30 to 35, the rate is different. You have to put aside 6.55% for your annuity. As it goes up, the contribution increases so that you are able to get a good pension amount. Okay. Now, I'm seeing so many complaints in the chat box that this is something that needs to be talked about, in case there is a grievance. In case you feel your contribution amount is not showing. In case you feel you put aside money but nothing is coming out. It is important that you know who to reach out to. Okay. And if that is happening with you, means that at some point in time, something that you selected in the form was either wrong or it is not recorded properly with the CRA, which is NSDL. Okay. So you can reach out to your concerned intermediary, Then, if it doesn't work out, reach out to the NPS trust. It is escalated to NPS trust after 30 days. Thereafter, it goes to the ombudsman, who takes care to, resolve it in the next 90 days. If still, God forbid, it is not resolved, take it up with pfrda, and worst case, it goes to Securities Appellate Tribunal. So unlike some of the other assets that people are jumping on today, where there is no security, if what were to happen if something goes wrong, there's a proper grievance redressal methodology in place to take care of some unforeseen situations that may arise. If someone is saying, no, he is not getting, that much amount of money that he contributed, see why is he not getting, rather than just, saying that the scheme is bad. Try to understand what are some of the things that may not be reflecting properly. What was the contribution? If someone has contributed well over a period of time, it is not possible that he will get 500 rupees in pension. Okay. Family, you all know that it is very important for any policy to have a nomination. Nomination is something that a lot of people miss. They don't do nomination. But with regards to NPS, it is mandatory. So make sure that if you are now married, it is your wife's name that is reflecting there. Okay. We faced this issue recently. My brother-in-law expired. He passed away because of cancer at 36 years of age. And since, nomination had not been updated, again, it goes through who is the legal heir, all those things. So make sure with changes in your financial or personal situation, all the records are updated, keeping in mind your current situation. Okay. Like I mentioned, you can avail, and tax ITR filing season is on. Your NPS contributions, make sure that if you're doing it yourself, you are checking 80CCD and availing that additional 50,000 rupees, which is exclusively available under NPS. No other scheme provides that. Okay. If your CA is doing it, please tell them to make sure that this has been checked. Now, NPS is the only scheme which does not have GST. It is not applicable on annuity purchases if you were to retire. So it's been designed to keep in mind, the needs of people when they retire. So it is very important that you understand the purpose of it. Okay. Now, how can you access your account? You can do it using a mobile app. Can you set up an SIP similar to a mutual fund SIP for your NPS? Yes, you can. How should you get your statement? How to check your fund value? All those things you can do using your PRAN number through your central record keeping agency. Okay. Make sure that your FATCA certification is there. Make sure that your statement of holding, transaction, everything you are able to see. You can either do it using the mobile app that is there, that NPS provides. You can go find NPS by Protean e-governance, which is Protean used to be NSDL. Okay. Or by KFinTech. And you can access your contributions, your details. Make sure you see that your FATCA self-certification is uploaded. Has it not been uploaded? Because then, say, with any process, sometimes, something may have been missed. But it is our money. It is our responsibility that we make sure that it has been catered to. Okay? Go check out, what is your fund value? What are the returns it is generating? Should I compare it with other plans? So this is how your statement of transaction will look. See what is the current value. What is the XIRR implies the internal rate of return that the fund has. So like someone was saying, it is giving 9% right now. How much will it continue to give me over periods of time? Okay. Especially for the purpose of pension. How many units does it have? Like your mutual fund, what is the net asset value? Right? What is the total accumulated corpus that is there? You can see, your contribution, your employer's contribution. As you go higher in rank, if your salary increased, if the arrears had come in, what were the area contributions? You can all access through that app. So make sure that you become a सजग citizen. कि आप सजग ग्राहक की तरह इस चीज को समझें और फिर उसके बाद कहें कि it is good or bad. Okay. Like I mentioned, NPS is the only scheme that allows changing of the fund manager. You can change your pension fund manager through the CRA by logging on to www.cransdl.com. Okay. You can also change your scheme. See if your scheme is not giving good returns. Maybe compare it with other schemes. That data is easily available on the internet. Right? Yes. Someone is saying, if I joined state government in 2009, my NPS was deducted. Yeah, we will take that query. No, sir. I'm sorry. I wanted to complete the presentation. We will take your query towards the end. How should you change your nominee? You should update your mobile number. All these are things that central government, state government employees already know. But I will now take questions that you have. It brings me to the end of the presentation.